breakfast, and those were the top headlines that we are going to discuss in greater detail through the course of the show. But first up, as always, let's take a look at what's happening in the Asian markets. We did see a Nasdaq fuel rally in the US markets that was up around 3%, but the Asian markets, they are largely mixed today. So we have largely indices in the red versus green today. Hang Seng is down 1.5%. That's the biggest loser there. Shanghai down 0.7%. We have Taiwan, which is sitting with cuts of around 3%, 50 points down there. On the flip side, we have Nikkei and Straits Time, which are trading in the green. We have the SGX Nifty, which will come up for you. Yesterday, there was some support coming in from ITC for our own markets, and today the SGX Nifty is indicating that the start for our own markets will be in the green. A 60-point uptick is what the SGX Nifty is indicating here. So let's see which way things go, whether volatility will continue to be the name of the game today as well. But let's talk about the US markets, where Wall Street ended Thursday's trading session mixed, with the Dow Jones 39 points lower, the S&P 500 gaining close to 1.5%, and the Nasdaq Composite surging close to 3.5%. Well, that's the update as far as the markets are concerned, but stock futures are trading lower following disappointing earnings from tech majors Apple and Alphabet. Shares of Apple fell in extended trading hours after the company missed expectations for revenue, profit and sales for many of its lines of business. Apple CEO Tim Cook said three factors hurt the results: a strong dollar, production issues in China affecting the iPhone 14 Pro and iPhone 14 Pro Max, and the overall macroeconomic environment. Shares of Alphabet were also under pressure after the company missed both top-line and bottom-line expectations for the fourth quarter, largely due to YouTube ad revenue falling short of expectations. Moving on to the last update from our global market wrap, European markets ended Thursday's trading session higher, with the French CAC surging close to 1.5%, the German DAX rallying over 2%, and the British FTSE closing with a 59-point gain. The European Central Bank raised interest rates by 50 basis points, taking its key rate to 2.5%. In a statement, the ECB pledged to stay the course in raising interest rates significantly at a steady pace, and intended to hike rates by another 50 basis points in March. Meanwhile, the Bank of England also raised interest rates by 50 basis points and dialed back some of its bleak forecast. The bank also revised its economic outlook to forecast a shorter and shallower recession than previously projected. Remember, the Bank of England had projected that UK was entering its longest recession on record. All right, that's the global market action. Let's see how will these overnight cues impact our markets. We have a lot of domestic cues as well that we need to track. So let's get in our research team joining in to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning and happy Friday to all of you. It's been a very busy week, right? So Rima, let me come across to you. What is the market setup looking like today?
Well, it finally feels that the volatility related to big events, whether it's the Adani Group saga or the budget, the FOMC less so much, but all the big events appear to be out of the way, and the volatility which was associated particularly with the Adani Group, at least yesterday's price action seemed to suggest that that may be behind us. So if you remember yesterday's trading action, in the first 30 minutes, the Nifty had swung 200 points. It was 17,450 on the way down to 17,650 on the way up. This volatility happened in the first 30 minutes. But after that, things appear to be, on the quieter side. The Nifty moved sideways and finally ended pretty much unchanged. The correction, that said, in the Adani Group stocks has continued. And today as well, we're going to be tracking it very closely because the Dow Jones Sustainability Index has removed Adani Enterprises effective 7th of February prior to the market's opening. So we have to, try and find out what are the passive funds which are linked to the Dow Jones Sustainability Index. The key levels to track, because now things could appear to be a bit more sideways now that the big events are out of the way. On the way down, it will be 17,350. That was the budget intraday low. Go lower and you've got the 200-day moving average roughly around 17,300. On the way up, you will watch for levels of 17,800 going almost up to 18,000, which was the budget intraday high level. So that will be the important level on the upside. You've been talking about the global markets and how the tech giants like Apple, Amazon, Alphabet earnings disappointed the street. The FI action, just a quick word, the FI sold in the cash market yesterday, 3,065 crore in the cash market. Disappointing because just in the prior session, the FIs were buyers and we were hoping they've turned the corner, but that's not the case. So the focus is going to be more on individual stocks because we have so much Sonal to track in terms of earnings as well. Back to you.
We do, Rima, we do. So, of course, that will be in focus. So let's take that forward and talk about the stocks that will be in focus today. Vivek is joining us with that list. Hey, Vivek.
Well, good morning. Quite a few stocks, in focus on the back of quite a few results that came in post-market as yesterday. First on our list is Tata Consumer Products. The results were largely in line with the CNBC-TV18 poll. Revenues coming in at close to 3,475. An exceptional gain of 78 crores aided the PAT, and PAT came in at close to 365 crore. Moving on to MGL, steep price hikes that the company has taken aided the quarter this time around. Revenue up 7%, EBITDA up 1% on a year-on-year basis, and profitability up 5% again on a year-on-year basis. Coming to Crompton Greaves Consumer, it's been a muted quarter from the company this time around. Our net profit coming in close to 85 crore versus our poll of close to 115 crore. EBITDA too weaker than estimates at 152 crore versus our poll of 197 crore. Apollo Tyres, a steady quarter from the company this time around. Revenues up almost 12.5%, EBITDA up almost 23% on a year-on-year basis, and profitability up almost 31% on a year-on-year basis. Berger Paints, muted quarter in line with what was anticipated. Net profits down almost 20.5%, and EBITDA was down almost 11%. Two stocks in news on the back of news flow. HDFC AMC, an important update coming in there. SEBI has approved the sale of Adani Investments' entire 10.21% stake in the company, and SBI Life too has quantified the impact of the budget. So what they're saying is that the share of business of non-linked policies with an annual premium of over 5 lakhs is less than 2% of the total APE. They believe that the impact at this point of time is quite insignificant.
Okay, all right. So that's an important update, of course. Thank you, Vivek, for that list. And finally, let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning. Yesterday we saw that the institutions, they turned sellers yet again because the FIs, they returned to the selling basket. Remember the previous trading session, there was a bit of a hope that maybe they've turned the corner, maybe the institutions could turn buyers, but that wasn't the case. What are the FIs doing in the F&O market? Well, they're piling on the shorts. They added close to 29,000 short contracts yesterday. And now the short positioning as a percentage of the index futures, it's moved to around 83% or thereabouts. But on the option side, it's quite interesting. The 17,600 call as well as put, they're very, very active. Added close to 55 lakh shares in yesterday's trading session. And it appears there's a short straddle that's playing out here. What is that? You write the call, you write the put, you write both of them together. The total premium between both of them is around 315 approximately. But say that the premium has come down a little bit on both those two strikes. So taking a rough average, that strategy is playing out while you pocketing a premium close to around 350 rupees odd. That means 17,600, you add 350 points, gives you a bit of a resistance level. And on the downside, 17,250. That's 17,600 minus 350. So that's the broad range. And if someone's playing that strategy, then if the Nifty can end in this band on next Thursday, then you're safe. In terms of the SGX Nifty, well, this morning it's suggesting that we're likely to open up in the green. I always say it's more tricky when it opens up in the green. So the hope is that at some point of time you get a bit of an intraday dip, and let's see how it plays out. Otherwise, it seems the market's in a bit of a band. Back to you.
Well, after the sharp declines in Adani Group stocks over the past few sessions, the NSE has put 3 of them, including Adani Enterprises, into the ASM framework. Well, the stock of Adani Enterprises is also set to be removed from the Dow Jones Sustainability Indices. Vivek Iyer is joining us with all those details. Vivek?
Well, good morning. Absolutely right. So 3 stocks of Adani Enterprises, Adani Ports, as well as Ambuja Cements. Remember, all 3 of these stocks are available to trade in the futures and options segment as well. So what's actually happened overnight is that the National Stock Exchange has put all 3 of these stocks under the ASM framework, which is the Additional Surveillance Measure framework. What does it mean? Stocks will now be subject to more stringent rules, one of them being that intraday trading will require 100% margin upfront. Why is this particular list important? Because stocks in this particular list are monitored regularly due to factors such as price fluctuation, volatility, as well as significant variance as far as volumes is concerned. Also important to note that both Ambuja Cements and Adani Ports are in the F&O band, meaning no new fresh derivative positions can be taken over there as well. As you mentioned, Adani Enterprises stock will be in focus. It's going to be removed from the Dow Jones Sustainability Indices. In terms of the impact as far as passive funds are concerned, it's not very significant, but still an important event to keep note of as far as Adani Enterprises is concerned. And lastly, Adani Ports will be in focus on the back of an operational update that the company has given for the month of January. The cargo volumes from April to January of this particular year has gone up almost 8% on a year-on-year basis. Again, one operational update to keep track of.
Oh yes, we will. Vivek, thank you so much for joining us with all those updates. With that, let's move on to an exclusive. The chief economic advisor says the Adani crisis does not pose a systemic worry, says the issue does not have the potential to derail the financial system. Listen in as he speaks to Shireen Bhan on this matter.
On the issue of markets, and I want to address this with both you as well as the DPAM Secretary, and it's been a fairly volatile last 24 to 48 hours as far as the markets are concerned. I want to link this back to your point that you made about the indigestion having been worked out of the system. Bank balance sheets are looking strong at this point in time. Corporate balance sheets are looking strong, and which is why you believe that we are on the cusp of unleashing the animal spirits in the economy. But would you be concerned, and I don't want to draw you into any specifics, but would you be concerned about the kind of exposure that large conglomerates have to the banking sector at this point in time?
Based on the information we have, it doesn't look like at this point it has got the potential to derail the beginning of a new financial cycle.
Okay, so that's the update there. But moving on to some other stories, the Hinduja Group is looking to hike its stake in IndusInd Bank after the recent revision in RBI's private bank ownership guidelines, sources have told CNBC-TV18. However, the promoters would need RBI's explicit permission to do so, which is yet to be sought. Ritu Singh has been tracking the story and joins in with the details. Ritu?
Well, that's right. We understand that the Hindujas are looking to hike their stake in IndusInd Bank to up to 26% after the recent revision in RBI guidelines, which allowed promoters to hold up to 26% stake versus 15% earlier. Now, through the promoter entity, which is IIHL Holdings, Hindujas own about 16.51% stake in the bank as of December, with voting shares at 15.16%. There's a few ways of going about increasing their stake to 26% if RBI does give them that crucial nod, and we understand they're still in the process of making that application to RBI. One way could be for the promoters to buy shares from the open market, but here there is a limitation because the foreign shareholding in private banks is capped at 74%, and that figure is already close to 66 to 67% for IndusInd Bank, so limited headroom there. The other way could be for the bank to issue shares through a QIP or a preference issue, but that also we understand is unlikely at this point because IndusInd Bank is not looking to raise equity capital in the near term. So we'll have to see how the promoters go about this, but step one will be securing that all-important RBI nod, for which certain preconditions will also have to be met by the promoters, including freeing up their existing promoter shareholding of any encumbrances, among other conditions. We reached out to IndusInd Bank for a comment, but they did not offer one for this story.
All right, okay, Ritu, thank you for that. In fact, CNBC-TV18 has reached out to IndusInd Bank and sources clarified that no in-principle approval had been received for the stake hike yet and that the bank is going to apply for the approval now. Moving on, Union Minister Nitin Gadkari told CNBC-TV18 that electric vehicle makers will not need government subsidies for long. Speaking to Shireen Bhan, Gadkari said the final decision on EV subsidies would be taken by the Finance Ministry and the Heavy Industry Ministry.
I feel that the industry don't need subsidy for that. But already, as far as the petrol car, the GST is 48%. And for electric car, it is 5%. It is also one type of subsidy. And because of the reduction in the cost, particularly the alternative fuel vehicle, now we are going to start flex engine. So I feel that now no more subsidy is required for that.
No more subsidy is required. I think there's going to be a panic within the
But
electric...
it is one thing I want to clear it. It is up to the Finance Minister and Heavy Industries Ministry. They are looking after all the things. It is up to them to decide the question. But because of the present scenario, the cost of finished product which is coming, and day by day it is actually lithium batteries also cost is reduced. Now there is an alternative for aluminum ion battery, zinc ion battery. Then aluminum air technology is very good technology developed by Indian Oil Research Laboratory. So I feel that now this is the time that the cost is reduced. That's the reason I feel that for economic viability, that now they don't need subsidy. It can be economically viable.
You're into Power Breakfast on CNBC-TV18. It's time to talk all about commodities. A lot of action overnight there. Manisha Gupta is joining us with all the updates. Hey Manisha, good morning.
Morning, Sonal. Thank you for that. Well, we have seen the dollar index gain up, and that clearly seems to be putting some pressure on some of these commodities, especially gold, which after hitting a 1970 of a high has come off to $1930 per ounce right now. And you have a similar case coming for the crude oil prices also, which are actually making lower lows now. We also have seen a sixth weekly build-up in inventories in the U.S. markets. That also continues to wane. And the IEA says that the U.S. crude build-up is now at 34.5 million barrels in last 6 weeks itself, and that clearly is weighing onto the market as we still continue to see signs of stronger sustainable demand coming in from China there. But one area that continues to do well is the metal space. You still have the steel prices trading in the positive in Asia right now. Copper also seems to be holding around its 7-month highs, especially after supply disruption as the La Bambas copper mine in Peru, which accounts for 2% of metal worldwide. With the supply disruptions, shutdowns, maintenance happening there, copper is one metal that continues to rule the roost.
Okay, all right. So that's the update from the commodity markets. Positive cues in some of those segments. Thank you, Manisha, for that. And with that, it's curtains down on this edition of Power Breakfast with the news that the SGX Nifty is indicating an uptick in the green for our own market. Thanks a lot for joining us. Bazaar Morning Call comes up next.